Lockheed Martin is a stock that I'm very interested in buying in 2023, but the stock has been on a very big run recently and is finally starting to come down. And I believe it has a long way down to go, in my personal opinion. But I'm very interested in buying Lockheed Martin for two main reasons. One of the reasons, of course, as you know, many countries, especially the United States and NATO, they are increasing defense spending because of what's happening with Russia and Ukraine and also geopolitical issues. And I believe those type of companies, the defense stocks like Lockheed Martin, like General Dynamics, like Huntington, like many of those type of stocks, I believe they are entering a decade-long bull market for many different reasons. But again, the United States decided to increase their spending for around 10% for the defense. NATO in total, they increased their spending 27% for 2023. That's a huge increase. And I believe it's going to increase even more for this upcoming decade as we have much more geopolitical uncertainties and many other things. But the other reason why I believe Lockheed Martin and those type of defense stocks could actually be entering a decade-long bull market, and for my personal opinion, is actually because of the stability of their business. I believe this decade could be very choppy, and many other professional investors talked about the same thing, that after we have the recession, inflation comes down, then the Fed stimulates, maybe inflation picks back up, and then they have to hike again, and then, earnings suffer again, and then, the credit card debt goes up, and the interest rate goes up, and then companies suffer on earnings, and plenty of other uncertainties. But whenever you have stable businesses like Lockheed Martin and such defense stock in a choppy environment, they normally tend to trend at a premium and outperform the market in general whenever we have a lot of uncertainty. And I believe this is the perfect time for Lockheed Martin and other type of stocks to shine. But we can't really overpay for them, and we have to look and make sure that this is not priced in the stock yet. Because if you buy it and it's already priced in, trading at an expensive multiple, even if we're right on this whole thing, we're not going to get rewarded as shareholders of Lockheed Martin. And we can mainly see it in Lockheed Martin's backlog, which it grew over 5 billion year over year by Q3, and it closed at a massive $140 billion backlog, which is more than their entire market cap. And this is why those stocks have such stability, like Lockheed Martin. Even Huntington, if I'm not mistaken, they have 3 or 4 times their market cap in terms of backlog, type of contracts, which really gives them a lot of stability. And if we do have all this uncertain environment that I'm talking about in the future, such companies could actually trade at a premium, get a valuation multiple as investors run to them for safety. But as I said, we can't really overpay, because if we do, even if we're right, we're not going to get rewarded. And as my strategy is actually to buy, hated type of stocks at dirt cheap prices, I also have some long-term type of stocks that I do sell calls on and do a couple of other things. But it's stocks that I believe could do well no matter what. And Lockheed Martin fits this category perfectly. So in this video, we're going to take a deeper look and make sure Lockheed Martin is not a value trap and determine a perfect buying opportunity for Lockheed Martin. So again, I hope you enjoy this video. Taking a look a little bit at the income statement, and again, I covered those many times before. I did 2 videos, so I'm not going to go very deep on Lockheed Martin, but we can see that gross profits actually decreasing, on the quarter from September 26, 2021 into 2022. Even though their net sales actually increased, their gross profit actually decreased, and their operating profit even decreased. And the CEO actually talked about this, and he said it was mainly because of supply chain issues and labor type of issues. And I have heard the same thing from many other defense type of companies, but those things are starting to get much better. So maybe they can get back on track in terms of increasing operating profits and increasing gross profits. But this is something we have to pay attention to in the future. Again, to keep this analysis very short, looking at something as basic as a historical PE ratio for Lockheed Martin, now it's trading at a 20 PE ratio, and the mean PE for the stock was around 17, and it traded as low as 7 in the 2008 financial crisis. So that would really show us that Lockheed Martin is not cheap right now. It's not a bargain, but it's not too expensive either. So it's pretty close to its mean average. But this will show us that Lockheed Martin is not undervalued by any shape or form at such prices. Looking at something else which I like to look at with such stocks is the dividend yield. And the dividend yield right now is only 2.67%, and the mean dividend for Lockheed Martin is around 3%, and it had a dividend yield of as high as 5.37%, and that was again around 2012, 2013 type of levels. But looking at the dividend yield, it shows us that Lockheed Martin is not a bargain, at least on a historical basis, and especially when you compare it to many short-term type of treasuries yielding 4 to 5%, getting a 2% dividend yield and maybe an earnings yield of 5 to 6% is not very attractive from Lockheed Martin, in my personal opinion. So this really shows us that Lockheed Martin is not a bargain at those prices. Now the question is, when is the best time and what is the best price to buy Lockheed Martin at? And this is where I'm going to cover that in my valuation model. And for my valuation model, I used their last 12 months revenue, which was around 65 billion. The median analyst consensus is around 6% revenue growth. I used 4% because I normally like to be a little bit lower than the analyst estimate just to be conservative with my numbers. So using a 4% average revenue growth, even though they might beat it, we get around the $79 billion of revenue in 2027, 10.9% net income margin, which is, I kept it the same. That's $8.6 billion of net income in 2027, which is 5 years from now. Now, I used a 17 PE ratio, which, as we talked about, is their median PE, which is 17. We can try to use 20 and see the results, but this is not something I would bet on. And although I believe they could get a multiple expansion in the future because of the defense spending and stuff, this is not where I want to buy Lockheed Martin. So using a 17 PE ratio for the historical average, we get $147 billion market cap, which is around 41% on the upside over the next 5 years, or 8% compounded every single year for a yearly return over the next 5 years, not including the share buybacks which Lockheed Martin has been buying. So with buybacks, maybe it's around 10 to 11% return every single year. Now this is not bad at all, but I personally like to at least double my money over the next 3 to 5 years, and this is how I determine what is really worth risk reward for my personal taste to actually invest in such company. But again, looking at Lockheed Martin, my price to actually get a double on Lockheed Martin is somewhere around the $340 range, and now Lockheed Martin is trading at $450. But many of you will say that Lockheed Martin will never get to $340 per share. But I would like to remind you that in 2008, Lockheed Martin fell 50%. Even though it had a backlog, even though it was more stable than other stocks, it did fall 50%. Now, this is not 2008, but when we do have a big flush in the market, if we have it in the future, even in COVID, Lockheed Martin fell too with the market. Like it's not really an exception when everything falls together. So if we don't get 50% like 2008, I believe it's realistically we could get around 20 to 25% decline from Lockheed Martin at the level where it's trading at, which should put it around the $300 to $340 type of range, which again is close to COVID lows. But if we don't get to $340, I personally believe that Lockheed Martin is a buy at least somewhere close to $340. So maybe $360, $370, and then I dollar cost average down. But now Lockheed Martin is on my watch list, and I'm actually watching the stock. Whenever it gets somewhere close to $340 or maybe under $400, then I can take a second look and determine if it's really worth dollar cost averaging in or not. So this is my analysis on Lockheed Martin. I hope you enjoyed this video. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.